Hi, I'm Brian Carlin with Deeb Real Estate.
Hi, I'm Wes Miller, the Director of Emerging Markets at First State Bank.
We're here at an open house, and we thought we'd take just a few minutes to talk about the $8,000 federal tax credit. We're going to talk about the three main requirements or parts of the qualification process to be able to apply for that credit.
Correct. So the first one is, of course, you have to buy a house in 2009, from January 1st of 2009 until December 1st of 2009.
Absolutely. And you have to close, if it's new construction, and that still qualifies, you have to close and possess the property before December 1st of this year.
Correct. You also have to be a first-time home buyer, and the IRS defines that as anybody who has not owned a home in the previous 3 years.
What if you owned a house in the 90s, got a divorce, and have been renting since?
Then you qualify. Technically, you are considered a first-time home buyer.
How about your mom or dad helped you co-sign the loan a couple of years back and you sold the property or in the process of selling it? Do you still qualify at all?
Partial.
Partial.
So, and again, meet with one of us. We'd be happy to sit down with you and go over the exact details of how to put that together.
Now, so you have to buy a house in between certain dates. You have to be a first-time home buyer. The third requirement is income limits?
Correct. As a single person, you're allowed to make up to $75,000 per year. As a married couple, $150,000.
Absolutely. Now, I'm told there are some gradual declines to that. If you make just a little bit more than that, you can get partial credit.
Yes, you can also. There is also a partial credit for that too. And once again, if you need help with that, just give us a call.
And also, this is an IRS thing, so they complicate things a little bit. I'm told there's like a modified adjusted gross income.
Correct. The exact way to calculate their income isn't exactly what you bring home. It's calculated, again, with the IRS worksheet. And again, we'd be happy to help you with that.
Yeah, some of these things are way too difficult. This will be 10 minutes long. Forget that. Call us. We'll explain it to you.
Correct.
Now, we have experienced some pretty common questions, like, well, I'm planning to buy in about July or August. Can I get the credit early?
Yeah, there's one real convenient way to do that. You can actually contact your employer today, and you can ask them to stop withholding your taxes from your paycheck. That effectively allows you to take home your gross pay, and then when you file your tax return next year, the amount of tax that you owe will be offset by the $8,000 tax credit. And you can just save the extra money that you have off your gross paychecks every month and use that toward your home purchase this year.
Now, so you can't get the full $8,000 up front, but you can increase your take-home pay, save that up,
Exactly.
and then use that as a down payment.
Correct.
Awesome. Now, there were a couple other things, kind of like, how do you apply for this? How do you get the $8,000?
You have to file with your income taxes. So if you have already filed your 08 taxes, which are obviously due this year by April 15th, then you can file what's called an amended return. Otherwise, you can wait until next year and file it with your 09 tax returns.
I think that covers the bulk of it, Wes.
I think those are the most common questions that we've had.